Hey folks, it's Greg Rice. We're here at Nexus Property Management's headquarters in Pawtucket, Rhode Island. And right now I want to go over with you the top 3 reasons as to why real estate investing is a much better opportunity for you compared to the stock market. Now, the number one reason, in my small opinion here, is that you have and will always have direct control and influence of the outcome when you own a rental property. Now, it's not 100%. You cannot predict the future, but you can definitely make decisions and influence how your bottom line will turn out. Now, think about it this way. You decide to add a new roof. You put in new appliances. You put in better laundry facilities. Whatever it may be, you're making positive changes that will increase your profitability at the end of the year, in theory, okay? And on the flip side, you could also be the worst landlord. You could neglect all the maintenance, and still you're in charge. So the bottom line here is when you own a rental property, you retain all of the decision making. Now, there's nothing more valuable, especially in this lifetime, than being in charge of your own destiny. And when you own stocks, you're one of hundreds of thousands, millions of shareholders that have no real influence or decision-making ability whatsoever. So think about that. Being in control, not being in control. Which one sounds better to you? Number 2 here are the tax incentives. So think about it this way. When you own a rental property, virtually all of the things that you pay for, except for your principal mortgage payment, are tax deductible. So your taxes, your insurance, your water bill, your sewer bill, your maintenance, your leasing, all of these things that are actually improving the property are tax deductible. So your taxable income at the end of the year is decreasing, but your property, your assets value should be increasing. It's a double win-win there. It's beautiful. Now with stocks, what type of tax incentives are there? You make money on a stock, you're paying taxes. It's just like any other income. If you lose money, you've lost it. But with real estate, if you lose money, you still get to deduct all of the expenses, and not to mention the depreciation as well. So that's extremely valuable to you. The third point is that you retain and will always have some type of leverage and flexibility with that property. So you can take out equity, okay? Cash out, tax-free, it's your equity, and buy another house, go on vacation. Whatever you want to do, you can do it because you have that asset. And meanwhile, you're still collecting the rents. Don't forget that. You're still getting the tax deductions. When you own stocks, can you take a loan out of your Apple stock or out of your Tesla stock? Absolutely not. You have to sell them. And there you go. Your asset has just decreased because you took it out. It's very simple, folks. You buy a property, you're in charge, you get tax deductions, and you get the leverage. You get the passive income compared to owning stocks. Now, what sounds better to you? So once again, this is Gregory Rice. We're here at Nexus Property Management, your property managed.